Hey everybody, long time no see, ladies and gentlemen. Hello, this is me, Darius Anucauskas from Markets.com, and today's Wednesday. So we're ready for our midweek review, and since my last webinar, which was last Wednesday, a week actually has passed. So yes, I mean a lot has been happening. So look, we're gonna jump into the latest news, and we're gonna look at what's happening with the market, the movement, and everything. And yeah, hopefully you'll enjoy the session. Stick around. Apologies for my little cold. Feeling a little bit under the weather, but hopefully it will sort itself out later on. So look, thank you very much, and I'll see you in a bit. All right, ladies and gentlemen, hello, good morning. This is me, Darius Anucauskas from Markets.com, and today is the 23rd of April, 2025. So yes, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. First of all, a quick apologies for my little bit of a maybe cranky voice, because again I'm not feeling very well still. Had a bit of a cold and still have, so I have a little bit of a runny nose. So and my throat is a little bit going down. So look, I'll try to do my best. Yes. And we're going to look at the markets. We're going to look at the charts. There's a lot to look at. But before we go there, let's quickly have a read through our risk disclaimer. So yes, where's that one? There we go. The content we produce does not constitute an investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put the usual good morning in the chat room. Good morning, everyone. Yes, there we go. Good morning, everyone. So yeah, I hope you're all feeling nice and relaxed after the kind of the long holiday in a way we had, if you're celebrating that, of course. Look, also before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, Japanese Nikkei 225. So we're having a oh, excuse me. We're having a little bit of a reaction here to the upside. So that's in a way great, right? Everybody was like thinking, hey, after we have found good support near the lowest point of August of 2024, we rebounded and pushed higher again. And now what's interesting here is that my breakout point, which I talked about previously, the 35,111 zone, has kind of is in a way acting as a good area of resistance. But again, let's see. Let's not rush into things, because what I want to say here is that look, we overshot it by a little bit. Basically, we violated it by a lot in a way. But we kind of still remain below it. So if we continue to trade below this today, then maybe there is a chance for a bit of a retracement back down. Because look, at the moment, of course, the market positivity came in from the fact that we heard that Jerome Powell is not going to get fired, and and that the tariffs are going to be they're going to scale back a little bit on the tariffs. I'm loving the tone, the way everything is presented in a way like as if it's like, yeah, it was normal. I mean, it would never meant 145%, right? I mean, we never meant that. We just kind of, you know, you know. So that's the thing. So that's the problem with it, which I'm kind of looking at, and in a way, politics is intervening a lot lately with the economy, and unfortunately, it's something that we'll have to deal with for another like 3.5 years at least, or something like that. So most likely. But look, what can I say? For now, For now, what I'm seeing here is that I'm going day by day because it's difficult to try to project something, but at least there is some logic with the technical analysis. So look, for now, looking at this picture, I will say this way: as long as we stay below that 35,000 zone, I'm going to remain somewhat on the bearish side. If we continue to trade below that 35,000 zone, I'm leaning towards the downside again. If we do stay above that 35,000, maybe even better, 35,111 zone, then great. I will consider a bit of a move to the upside here towards this downside line taken from the high of the 24th of January. But still, that move to the upside could still be classed as a temporary correction before another possible leg of selling. Let's look into China 50 index here. So look, China is enjoying the moment because in general, I think that everybody's loving the fact that China is standing around and like not giving up, and I think that's great. Oh, excuse me. I think that's great, and we can see that by the index here. So yes, we did recover. Initially, the thought was that maybe, hey, if this downside line holds, then we could see another decline. But I said to you that if we break this downside line and we start pushing above all my EMAs here on the daily chart, then that's where we could see a nice good move to the upside. We could see a nice good move to the upside here, potentially maybe traveling back to that 13,500 zone ish, somewhere around here. But for now, at the moment, as you can see here, looking at this daily chart, we keep on overshooting the 50-day EMA, but we are struggling with we're struggling to stay above that area. So what I would like to see here is maybe something like this. Now, from the very short-term perspective, I would say a drop below the 100-day EMA could lead to the 200-day EMA. That's something that, again, a bit of speculation maybe, but of course, the preferred scenario is to wait for a drop below the 200-day EMA again, and then consider some moves higher, some moves to the downside. Sorry, but at the moment we're flirting with that 50-day EMA. Let's see if the third time is a charm, a third time is a lucky one, and if we can stay above that 50-day EMA. Let's jump into the U.S. indices, ladies and gentlemen. So Dow yesterday, boom, to the upside. I mean, okay, look. Initially, we're selling off because again, the news is coming out that Powell's going to get removed, and they want to remove Powell, and then yesterday we're coming out, we're saying like, oh, we're not going to remove Powell, and I just want him to be a little bit more proactive with the interest rates or interest rate cuts. But and in addition to that, we are saying like, oh, we're not going to do the 145% because that's way too high. But look, I mean, you imposed it initially, so I think that they understand what they're doing, and I think that they're trying to now kind of to come out clean out of this. So, and that's why there was a lot of positivity. The market rebounded. Great, that's wonderful. But looking at this technical picture here, I can see that the 40,000 zone is the one to watch on the Dow Jones Industrial Average. If the 40,000 zone surrenders to the bulls, then yes, we could see another move to the upside. However, this could be like a little temporary correction before another possible leg of selling, because we're still below this downside line. Yes, I know it's a tentative one, but nevertheless a downside line taken from the high of the 20th of February. If it provides good resistance, another decline here could be possible. But again, for now, like I said, we're carefully watching the 40,000 zone, and we're carefully watching what's happening with the market in general, because again, with the news, what's coming out from the White House, because every day there's something new, and every day it kind of shocks the market. We are seeing swings that, like, oh my god. So I mean, like I said, we need to be very careful. Volatility has been increased. I mean, looking at the VIX index here, I mean, okay, it's diminishing a little bit, but I think we're not seeing those shocks. Maybe the big shocks are reserved for either May or maybe June. We'll see. But for now, maybe I would say, looking at this picture, maybe for May. At least for now. Let's see. But jumping into the US index here, Dow. look, keep your eyes on the 40,000 zone. I mean, at the moment, it is something that I'm watching here very carefully. If this is going to provide good resistance, I'm considering a little bit of a decline. However, am I considering a strong decline? Well, at the moment, not really, because I'm going to look at this little upside line right here. Let me just put this like this way. So I'm looking at this upside line right here, and this one's taken from the low of the 9th of April. So if this is gonna provide support, if this is gonna provide support, maybe we'll see something of a triangle pattern forming. So something basically like this. So something for you to keep in mind, ladies and gentlemen. Again, at the moment, I know it's a little bit messy here. Let me just get rid of some of the lines. I think that some of these need to go, no longer valid. So I think, yes, we're going to stick to the trend lines for now. The S&P 500, similar story, looking good. This 5,385 territory is providing good resistance so far. Yes, we overshot it a few times, but hey, that's absolutely fine. We struggle to remain above it, and that's why I'm going to keep an eye on it. If we do push and stay above it, great. I'll go for a larger correction to the upside, because we are still trading below this downside line taken from the high of the 20th of February. So keep your eyes on down. The same story with this. I mean, if you're looking for some much higher levels, wait for a break of this downside line. NASDAQ. So, okay. NASDAQ loving the whole market turnaround, of course, but one company that is really struggling in a way, this one right there, Tesla. So look, from the beginning of this year, Tesla has lost around what? Around 40 something percent at one point. Yeah, around 40%, 43, 40. Yeah, let's name it around 40% basically lost. And okay, look, yesterday they reported bad numbers, and yes, they have like a drop in sales around like 20% or something, and this kind of led to Musk saying that, you know what, I think I'm going to be like reducing the amount of time that I'm spending on Dodge, Department of Government Efficiency, and spending more time on Tesla. And yep, this is, like I said, this is what probably is pushing the Tesla stock a little bit higher right now after hours, because I'm looking at what's happening right now in after hours. We're trading at around 250, but of course that everything can change still before we open up. So basically we're currently trading around here right now. So look, the comments of course are helping a little bit, but can they change people's thinking? Look, overall, if we do apply technical analysis on a Tesla stock, I would say this way. So yes, so far we have dropped around 40% this year, but let me just get rid of this for a little bit. But what I'm looking at here right now overall is this. Yes, we are on an uptrend, and we are on an uptrend trading above this upside line, which is taken from the lowest point of March of 2020. That's when we had that big massive decline, if you remember. And since then, yes, it rallied like significantly. Look at this. I mean, that was like, wow, spectacular move here, reaching like 400 and something, almost 500 at one point last year. Yep, then we started selling off heavily. Now, looking at this picture here, what I can say is that if we do apply technical analysis, then I can see that there is a little bit of room left to fill up this little part, reaching the potential potentially reaching this upside line. Of course, that is, like I said, that is if we're going to reach that. Now, another support of this downside scenario is this, that we seem to be forming something of a descending triangle pattern here. Let me show you what I'm talking about. There we go. So you can see yourselves. So according to all the TA rules, such patterns tend to break to the downside. However, we need to always wait for that confirmation break. If we can get that break, wonderful. Yes, we can go to the downside. But look, I've seen this happening in the opposite direction. So I've seen this breaking out, you know, through the downside line. So keep your eyes on it, because maybe it's not going to be the downside, or maybe it's not going to be this descending triangle. Maybe it's going to be something of a range later on, and just, you know, it's going to, say, pop above the upper side of this triangle, test the EMAs, and then kind of reverse back down. So just kind of keep that in mind. Let's jump into the US dollar index, ladies and gentlemen. So of course, after such a devastating moment here It tested my 97.70 zone. That's wonderful, actually. Look at this. I talked about this a lot, and last week I talked about it. I said I'm going to aim for that one. Boom, fantastic. Wonderful hit here. What's next? Next is basically, okay, this, basically next, well, at the moment, I'm going to pause, actually, because my preference right now for the downside is on a drop below the 97.70 zone right there. But for my upside scenario, I would actually prefer this one to actually move back above this upside line taken from the low of the 14th of July 2023. So if we can get that move, amazing. I will consider some higher levels, but at the moment, I'm not gonna. At the moment, I'm not gonna, like I said, I'm not gonna do anything, to be honest, because it's way too risky. 99 zone here, the 99.24 is a good area of resistance, which is the lowest point of July of that 2023. And currently, as you can see, we're supporting we're respecting that resistance line. So if it continues to respect that, then another decline here could be possible. In a way, we could start ranging here. So that's why I prefer to wait for a drop either below this 97.70 zone, and then actually let me just tidy up my chart a little bit here. I think that this needs to go. I think that maybe this is the point where which we could actually start aiming for. This is the one, the 94 and a half zone. Yep, that's what we could aim for. And for the upside, yes, at least a push back above the 99.24 zone could do the trick, but still I prefer a push back above this upside line. Let's see how that's going to play out. But for now, yes, we are stuck. DAX, the German index. So I mean, look at this. I mean, look at this V-shaped recovery. I mean, wow, look at this. This is amazing. Where's that measurement? Just a second. Price range. There we go. So, ladies and gentlemen, so when we opened up in January, where is it? January. There we go. This is when we opened up in January, and at one point we were losing around 7% this year, and then, but again, at one point we were gaining 17, almost 18%. Now we're gaining around almost 10% for the year. Right, that's not bad. Like I would say, that's not bad. However, what I want to say is that look, just a second. Let me put it. What I'm going to say is that, look, maybe this is a temporary correction before another possible leg of selling. However, it doesn't look like this right now. But looking at the Fibonacci, we're approaching my 70.50% here, 70.5% on the Fibonacci retracement, which is roughly around the 22,000 zone here. And if we can get that nice move here, if we can get that nice hold up here, then I will consider another decline. So look, I'm not getting way too comfortable yet. I am just observing the price action. And and then I'm going to go from there. But look, at this point, I would say this way that you need to be very careful at this point. We need to be very cautious. Again, every day something comes up. Again, right now I'm seeing that there is some positivity because again, everybody's on at the negotiation table. Everybody's at the negotiation table and everybody's like talking about, let's they make a deal. We hear that the UK's automotive sector is trying to reduce those 10% tariffs on their cars. I think they're trying to drop them to 2.5. And yeah, like I said, then that's positive news. That's good news. And we could see more of that coming out. And look, for now, from the technical perspective, as long as we stay above the 50-day EMA here shown as the green line right there, I will continue targeting the upside, but I will only aim for that 22,000 zone for now, and then we'll take it from there. Right, now then, jumping into the FTSE 100, let's have a look at that one. Where is that FTSE 100? Where is it? There we go. FTSE 100, similar story. Yes, seeing the positivity right now. Again, which I just mentioned, the automotive sector is, the UK's automotive sector is trying to negotiate those better deals, and that's what maybe is driving the market, giving maybe the fact that the U.S. is willing even to negotiate that. So that's that's kind of giving that positive news. But still, looking at this technical picture, I need a break out of this downside line, through this downside line. I need a break of it, and then I'll consider some higher levels. Let's jump into the Forex world, AUD, USD. So there we go. It's a bit of stabilization. Of course, the US dollar is kind of stabilized just a little bit. But is this enough? Is this enough? You can see that we're getting a hold up near the 200-day EMA. That's fine. But yeah, we're also at the same time holding above the downside line, which got broken, and that's in a way great. That's somewhat of a positive sign, but I prefer to wait for a push above the. I prefer to wait for a push above the this 200-day EMA, and then we'll go from there. So, long story short, for now, I am keeping an eye on this barrier, the 200-day EMA on my daily chart. If we see the body of the daily candle staying above it, I'm leaning towards the upside. Let's have a look at what's happening in the economic calendar, ladies and gentlemen. So next, there we go. Yes. So let me just refresh the page here. Seems to be struggling to refresh. Let me just. Okay. All right, okay, like just a second. Let me just open the calendar this way. Economic calendar. Let's see if it's, for some reason it's not picking up. Okay, right, let me just double check then with another calendar, which we have. Let's test out the calendar here. Where's that calendar trading? Where's that trading calendar? Economic calendar, there we go. In trading, there we go. Did it load up? Yes, there we go. Oh, I love this one. Okay, so Wednesday, ladies and gentlemen, Wednesday, we have, we don't really have much in a way. I mean, apart from a few pieces of data sets like the flash PMIs that are coming out from the Eurozone, the flash S&P Global Composite Manufacturing Services PMIs coming out from UK, trade balance from the EU, but yeah, it's not the most maybe exciting week apart from the economic data perspective, but nevertheless, it's quite an interesting one, I would say still. So by the way, tomorrow we don't have RBA bulletin that's coming out tomorrow. That's fine. And on Friday, by the way, just to let you know, on Friday there's not going to be a session. I'm not going to hold a session on Friday. I will resume on Monday. So yeah, on Friday we have Tokyo core and headline CPI numbers from so we'll see how that plays out. But of course, for today. New Zealand, Australian flash PMIs came out. Let's have a look. Actually, this is so the expectations came out. Everything is on the lower side, to be honest. So yep, not really good for the Australian dollar, I would say. And hey, I'm not saying that this is going to be like devastating for the Australian dollar. No, I think everything is right now driven by the US dollar. The US dollar is on the weaker side. Yes, we're seeing strength in other currencies against it. So that's kind of pretty straightforward in a way. AUDJPY, let's have a look at this one, pushing back up, and so we're forming something of a possible bullish flag here on the AUDJPY, meaning that there could be some more upside in the AUDJPY, and given that AUDJPY is our risk on, risk off monitor, we expect maybe the stock market to rebound a little bit. So hey, hopefully this happens. Hopefully this is not lying, and that means that yes, like I said, I'm leaning a little bit more towards the upside on this pair, and yep, I need a clearance of maybe this 91.40 zone, yes, in order to get a little bit more excited with the upside. NZD USD, okay, look, I mean, wow, what a spectacular move here. Honestly, like from this area, I mean, we've rate. Got around like 10% already. Wow, amazing. I mean, honestly, this is just spectacular. But one of my areas got reached, and I think that's great. And look, I mean, I've talked about the 0.6037 zone. Came very close. That's fine. I'll take that. But at this point, I think we need to chill. I think we need to relax a little bit, and we need to wait for that clearance of this territory, because if we can get that move, amazing. More buyers could join in a way. But let's put it this way: if we do apply the Fibonacci on this one, and we do look at this, how much we've retraced. Look at this, beautiful, bang on 61.8% on the Fibonacci retracement. That's amazing. That's a good result, and we're stalling above the 50%. So that's why this area becomes quite an important one to watch. If we want to get a nice clearance of that one, great. I will wait for that, and if we can get that clearance, the next target is the 70.5 here on the near the 0.6106, and then we'll go from there. For the downside, I would like to see here a move below the 50% retracement, and then I could consider a move towards my 200-day EMA. USDJPY, let's have a look at this one. What a great move, honestly. Look at this. I mean, I targeted this 139.5 zone, came very close to that. This is the lowest point of September for 2024, 139.57. We came very close to that, and we then rebounded, pushed higher. But look, we're struggling with this 142.06 area. Okay, that's interesting. So look, I would say this way: as long as we stay above this area, above this 142.06, then I will consider a move to the upside, and then we'll go from there. US dollar against the Canadian dollar. Okay, look, Canada next week. I think that's what we need to look at next week, if I'm not mistaken. Okay, I need to let it load it up, because for some reason Trading Views economic calendar is lagging today. Yep. Okay. But looking at this picture, you know what I really want to do? I want to get rid of everything and remove all the drawings and start fresh. I'll bring back some lines, of course. That's something that I'm going to keep an eye on. There we go. These two areas, we violated the 1.3822 zone. That's okay. That's fine. But we didn't really reach my 1.3750 zone. Okay. Still, there is still some room. Look. I am looking at this little pattern here, and looking at this little pattern, and this little pattern is something of a falling wedge pattern. But what's interesting here is that when I've talked about these before, and I do like them, and they tend to break to the upside at some point. However, that's not for sure. That's never the correct, how to say, it's not the guaranteed thing here. It's not even loading up, honestly. Like, look at this. I mean, okay, let's jump into this. There we go. So this is for next week. Let me just see if Canada is around here somewhere. I think there was a piece of news coming out. Let's have a look. Okay, the U.S. Retail inventories. Okay, JOLTS. Next week is going to be an interesting one. Next week we're going to have NFPs, by the way. So, yep, keep your eyes on those. But look, you know what? Let me just filter this very quickly. Filter high and medium. Okay, and let's put it even high. Okay, so April 30th. Where's that, Canada? Okay, come on, load up. May 1st. By the way, on May 1st, a lot of markets are going to be closed, so just keep that in mind. Okay, I can't see anything. All right. Okay, Canada GDP month. That the GDP numbers are coming out next week. So, look, maybe that could be a little bit of a trigger for Canada. And let's have a look at medium. If there's anything medium. No, it's not even working. Okay, everything is. All economic calendars are not working. Okay, right. Look, What can I say? For now, what I said before about this little pattern. Whenever we have like a strong decline and then we start gradually moving to the downside, it tends to break higher at some point here. So basically, I'm considering something like this at some point. But I'm gonna make it this. I'm gonna make this bold call, and I'm gonna say that look. I'm going to be leaning a little bit more towards the upside, but I need a confirmation break of the upper side of this falling wedge pattern. Of course, don't get me wrong, this could still break out lower. That's absolutely true. But again, for this at the same time, we also need a breakout to the downside here. So breakout through the lower side. So once we get that, and then I'm going to consider some, the next short-term directional move. US dollar against the Swiss franc, there we go, finally stabilized a little bit. I mean, because this is just a nightmare. This has been a nightmare for the US dollar against the Swiss franc. I mean, look at this. I mean, wow. Dropping from like 0.88 zone all the way to 0.80. Okay. Look, for now, let's put it this way. I'm not really done with the downside yet. I mean, I'm going to stick to my lower levels if we do drop below the 0.8038 zone. There we go. That's the lowest point of April, the current lowest point of April. If we can clear that, I will go further south. Let's jump into Euro USD. So after we had the interest rate decision from the ECB, that one kind of yes. I mean, initially it was look, yes, it was a cut. It's not good for the euro, but the euro is stronger just because of the dollar. That's it, period. Nothing much to say here. I mean, they're going to continue cutting most likely, and they're going to continue supporting the economy. But here at the moment, I think that still the dollar, the US dollar, is the one that is the driving force for the Euro USD. And look at this. I mean, from the technical perspective, I talked about my hurdle here, this 1.1483 and 95. In general, the 1.15, I was aiming for that one, and I reached that one. Okay, we overshot it a little bit, but we drifted back down, back below the 1.1495. So look, I think we might see a little bit of a correction here as long as we stay below the 1.15 zone. So if we continue to trade below the 1.15, I might consider a bit of a decrease here, the decline here. Not saying a massive correction or any of some sort, no, but a retracement back down towards this upside line, if you can still see it. But I do like the 23.6 here on the Fibonacci retracement, which is on my chart around the 1.12, 40, 45, something like that, around that area. But again, let's see if that's going to be the case or not. Let's jump into EUROJPY. This one's stuck, but I do like it because it remains above my EMAs. That's a good thing here. So in a way, this is looking quite positive. And you know what? I'm going to stay positive at this point. So I will say it this way. As long as we stay above the EMAs here, I'm going to continue targeting the upside. Euro Aussie, there we go. We stabilized. Nice little retracement here. So as long as we stay above this upside line, I'm going to continue targeting the upside. Euro CHF. Euro CHF is an interesting one here as well. We are retracing. Yes, Euro is picking up some ground, but overall, I'll say it this way. I like the EMAs. I like this upside line. If we stay below all that, I'm considering another move down. Euro GBP. Euro GBP is one of my least favorite pairs, and well, this one it seems to be stable. It seems to stabilize a little bit, but I'm not really giving up on the euro yet. I think there could be some more upside on this one. But let's have a look at GBPUSD. GBP is strong as well. Look at this beautiful move, 1.3433 zone. We've managed to reach that one, so great. And we're seeing a little bit of retracement at the moment. It's very volatile. It's up and down here, but hey, I'm not gonna rush into things yet. I'm gonna just continue observing the price action here, and hey, look, if this is gonna stay above the 1.3312 zone, somewhere around here, then there is a good chance for this one to move higher. However, to be honest, at this point, it's very difficult to even talk about the upside, because again, if the US dollar stabilizes, and this had already quite a decent up move, so I think that we need just a break above the 1.3433 territory or 1.3434 zone in order to go higher. For the downside, a drop below the 1.32 zone I think could be nice. Let's jump into Swiss franc against the Japanese yen, the battle of the safe havens, as I call it. And look at this. I mean, look at this situation here. We're falling below this. We fell back below the downside line. We fell below the 38.2 here on the Fibonacci retracement, and we found good support near the 50%. Wonderful. So in order to go lower, I think that a break below that 50% here is required. If we can get a nice move back up, back above the 38.2, then that's wonderful. I will consider a move higher. Let's jump into gold. Wow. I mean, wow, this is crazy. I mean, look at this. Gold yesterday rallied 3,500 tick, and then quickly, look at just brief tick of the 3,500 and then sharp reversal. Look at this, a 200 move to the downside. I mean, I feel sorry for those short sellers in a way. I mean, I was kind of, thinking that maybe this could stabilize a little bit, for stay around here for longer and then kind of reverse back down. What a sharp move back. Look, now the question is, how far can this go? So currently, I'm looking at my Fibonacci extension, and so far it's kind of doing a good job and it's working. And I think, yeah, this, I'll show you what I'm talking on the monthly chart. You can see it better. So on the monthly chart, look at this. What a spectacular move we're having on the monthly chart. Look at this candle. I mean, wow. At one point, from the lows of this month to the high, we did 18%. I mean, that's a spectacular move. However, at the same time, it also is a little bit of a bearish indication for me. So what I'm worried right now, so I want to see next month if we are going to struggle to overcome the 3,500. I do still believe that we could go for a bit of a move to the upside here, but that's probably going to be like maybe next week. I mean, again, next month maybe. I do understand that we still have a lot of days to go through in April. We still have the some data that's coming out, but did this load up or not? No, it didn't even load up. Yeah, and then this week is not loading up. I mean, what the hell is happening here? Oh well. Anyway, so we'll have to live without this, but let me just double check something here. Let me have a look this week. This week. So yes, look, what I'm watching today and tomorrow. Let me just double check very quickly. New housing from Canada. There we go. I finally managed to load up Canada. Retail sales preliminary. Retail sales coming out on Friday. That's where we could see a little bit of movement in the Canadian dollar. There we go, ladies and gentlemen. Friday, keep your eyes on that one. And for next week, so we still have, like I said, we still have a few days left. And next week we have 3 days of trading for April. So we have we have a bunch of data coming out. We have JOLTS, we have ADP numbers coming out, Australian CPIs are coming out. So we keep your eyes on that one. It's gonna be end Wednesday, if I'm not mistaken. Let me just double check. Yeah, Wednesday, April 30th is gonna be full. It's going to be full of data. It seems like everybody's delivering. The EU is delivering. Germany is delivering its inflation numbers. EU GDP growth rate, the flash, the estimates. We're going to have, yes, like I said, I mentioned the GDP, the numbers from Canada. Then we are going to have core and core and headline PCE numbers from the US. Chicago PMI. Look, I mean, this is going to be like next week, Wednesday, is going to be quite a full calendar. And I think that you need to be very, very careful. And like I said, gold, it could be one of those movers. So I'm really going to be interested to see what's going to happen here. Are we going to see as some sort of a some sort of a like a reversal going into May, because again this okay, great, gold is, yes, it's an appreciating asset, but it's in the short run it has to correct, otherwise it's not really, like, nobody wants to buy at these highs, unless you're really, you know the market, you're going to speculate, you know what you're doing, unless you're like a government or something, like where you're buying like a lot of gold, and you're you know you're you know that this will, you can unload it very quickly. So yeah, uh, I think that at this point we're seeing this positivity. I think that at some point the governments will have to tap into those resources, into those gold, into that gold stockpile, because they will need money to support the economy, because we're seeing a global shakeup in a way. And let me allow you to remember that, or let me remind you that. Uh, that in whenever we start having problems, it normally takes us around a year for people to realize. Basically, it's rational economics. When it takes about a year for people to realize that there is a problem, so the problem has already started. And I think that, like I said, if about a year we need, or like maybe less than that, 9 to maybe 11 months, where people start panicking in a way. And look, gold could also drop, because again, if nobody has the amount, if nobody has money to buy gold, yes, gold is an appreciating asset, but if you can park your money, but still the demand for gold might diminish, just because, like I said, governments might tap into the gold stocks and stockpiles, because gold reserves, because again they need money to support the economy. Cash is king in a way. So that's what I'm saying. So be careful for now. Yes, we're seeing this action to the upside, but look, do I believe 3,500 could be again tested? In a way, yes, maybe, yes, it could be, but I would say, just if it struggles to stay above the 3,500 again, then yeah, we could see another decline. Let's have a look at what's happening with silver. Silver is also, like, look at this. I mean, this is a monthly chart on silver. We had a drop to 28 and then we recovered. I mean, this is just, wow, crazy. So there is a chance for this one to move a little bit higher. I want to remove this. Actually, I want to remove everything for now and start fresh. So we pushed above all my EMAs on the daily chart. That's great, wonderful. But at the moment, the question is, how far can we go for that retracement? Because what we're doing right now is a retracement. As you can see here, after peaking in March, we then declined in the beginning of April, and look at this, we 70.50. We've tested that, and it seems like we're trying to go for that 79% on the Fibonacci retracement. Let's see if that's going to happen, if that's going to work out or not. If you're very bearish on silver, then I would say wait for a drop at least back below the 60.8 zone here, and then we'll go from there. Copper is also seeing a nice retracement back up here. So yes, 70.5 here is a good target. So hey, let's see what's going to happen here. For now, I'm targeting that 70.5%, and then we'll go from there. Oil. Oil is, yeah, it's doing a little bit of a retracement. That's absolutely fine. No problems there. But again, I'm going to stick to my game plan. I talked a lot about this already, and as I said it before, as long as we stay below the 65 zone, I will continue targeting the downside. If we do clear it, if we do clear and stay above the 65 zone, then great, I will consider a move higher. Natural gas, I'm still bearish on this one. I need to see this one popping back above the 200-day EMA, and then I will consider a slightly larger correction to the upside. Why? Because, well, this because we have this downside line. We have this downside line. Look, at one point, maybe somebody might say, hey, but isn't this forming a nice falling wedge pattern? Yeah, it could be. But it's very steep right now, and I would say this way: as long as we stay inside the pattern, this could still continue targeting. This could still continue moving lower. We need a clearance of the upper side of the falling veg here in order to get a little bit more comfortable with the upside. Coffee. Coffee is at an interesting spot, and look, I don't have much to say, to be honest, at this point about coffee. Just the fact that it held nicely below this upside line, which we can get rid of now, and we can just kind of monitor this downside line for now. So I would prefer to wait. Now, this is where I'm going to lower my expectations here, lower my breakout barrier. I would prefer to wait for a break of this downside line, actually, and then consider some higher areas. This downside line is taken from the high of the 19th of February. Wheat, actually, let's have a look at wheat. Nothing major, to be honest, still stuck here. Sugar is seeing some positivity. Look at this, beautiful 17.5 zone, provided fantastic support, pushed higher. Okay, good. Now the question is, can we pop above this upside line? If we can get that nice move above this upside line, amazing. I'll consider a move higher. Cotton is doing well. I like cotton, and it's giving me a nice push here above the 100-day EMA here, shown as the blue line. So yes, it's like I said, it's pushing nicely to the upside. And look, I'll say it this way: as long as we stay above the 100-day EMA, my next target is the 200-day EMA. Period. Let's have a look at for dessert now, ladies and gentlemen. Let's have a look at the crypto world. Bitcoin, okay, massive move to the upside here, amazing. I talked about this. I said if we do pop above the 88,000 zone, I will consider 88,700 zone. I'll consider a move higher towards the 94,800. There we go, almost there. So far, so good. 100,000, hey, could be the case. Bitcoin Cash pushing nicely to the upside as well, trying to travel higher. And yeah, look, what can I say? For now, I need to push above all my EMAs here on the daily chart in order to get comfortable with the upside. So I'm not getting that yet. So I'm just going to be cautiously bullish. Ethereum, beautiful. Ethereum, very, very technical. I like this one. So it broke the downside line and pushed above the 1,754 territory. So yes, what can I say? So far, so good. I'm aiming for the 50-day EMA first, and then maybe this barrier right there, 2,120, and then we'll go from there. Ripple. Ripple also pushing nicely to the upside. So far, so good. But on Ripple, we have to say that this is classed as a temporary correction before another possible leg of selling, because again, this could in a way play out this way. And if we can get a nice move this way, then great. I would say this downside line is something that I'm watching, and if we can get that move, above this downside line, above this 2.37 territory, then yes, great. I'll consider more buyers. Litecoin is at an interesting spot here as well. And look, we are keeping an eye on this 83 territory right here. And look, for now, it seems to be working out like a charm. Great movement. I think that yes, there could be some more upside, but I'm being very careful around these EMAs, because look, with all these other EMAs, for example, here, Ethereum, you can see all the shorter EMAs are on the lower side. Bitcoin is still somewhat ish, Bitcoin Cash, again, the same story, everything's on the lower side. Litecoin just kind of dropped, the 50 just dropped below the 200. Maybe we're waiting for the 100 to drop as well. We'll see. Dogecoin, this one, yeah, continue, and this one's very close as well. I mean, yes, we're seeing a nice retracement, but to the upside. But again, the 100-day EMA seems to be willing to drop below the 200. Let's see if that's going to happen or not. If that's the case, then we can see more downside. However, my preferred downside scenario is still below the 0.14 zone right there. Polkadot. Polkadot is approaching, yes, my 50-day EMA, but again, I'm not rushing into things. In general, I said to you that if we do pop back above the 3.57 territory, I'm leaning towards my EMAs. So far, so good. I'm aiming for the 50. If we clear the 50, I'll go for the 100. If we clear the 100, I'll go for the 200, period. So, ladies and gentlemen, that is a wrap. That is a wrap for this session, and I hope you found it useful. I hope you really found it useful. I tried to do my best. Apologies for my over my nose a little bit, for my little coughing, still not feeling very well. And so to let you know that there won't be a session on Friday as I will be off. I will be back on Monday, but yep, keep your eyes. There's going to be a webinar. At least we're planning for now to launch the webinar on next Wednesday. So yep, keep your eyes on the on our social media. We're gonna announce there, and yeah, it's gonna be a nice webinar with me, which is gonna be in the evening, where we're gonna look at the live market scenarios. So yes, check it out, and hopefully you'll enjoy that session. Hopefully you enjoyed this session, and yeah, I'll see you next week on Monday. Thank you very much, and bye bye.